Good morning, everybody. Happy Sunday. I turned on the closed captions, so there's going to be a slight delay on the stream, I think. But some people were asking for that, so I'm seeing how it works. I'm not going to use it on trading days because I still want to maintain a low latency. But today it doesn't matter. Anyway, how's everyone doing? Well, thank you, Snake Whips. May your pickle jar also be bountiful. So many red bars. I know. I can change that and make it look prettier, but they're still mostly red. Except this last one. Can you please say lawyer to see how CC reacts? What? Can you clarify Turdford's ETF FTD data? How do ETF FTDs actually relate to GME specific FTDs in those ETFs? What is the guesstimation of GME FTDs in said ETFs? I mean, obviously, certain stocks in those ETFs are shorted far harder than others. So they're definitely picking apart the baskets and choosing where to short. Um, let's see, in the 10 million ETF FTDs that were present in September, we saw about 1.5 million in like raw buying volume on November 3rd. So we have more this time, closer to 12 million. I would expect to see slightly more on GameStop. But again, that's just a guesstimate. With how hard the price is tanked, it could be far more. It could be up to 25% of the weight. We just don't know. Can you tell Yelia that a bunch of us here appreciate her efforts? She knows. I'm going to be including any updates to her model in my daily posts from now on. I think she just doesn't want to uh, deal with like the harassment and stuff on Reddit anymore, which is understandable. A lot of people are becoming kind of not pissed off, but just they're over it, you know. Tuesday it probably has Jimmy weighted at what percentage? 40. I don't know if he weighted it at all. What do you think GME being green and a red market on Friday signals? Hopefully positive price action this coming week. We had a significant number of puts closed and exercised. This will apply positive pressure to the gamma. There were still lots of in the money calls, which will also, and some evidence of after hours exercising. A little bit, not a lot. It's hard to track that, but it did look like some calls were exercised, so that'll also improve that positive gex pressure from the market maker side. In addition to that, we have the FTDs from the futures fail date or futures expiry, which are an unknown quantity. And these are the T plus 2 plus 35 FTDs. There are more ETF FTDs from futures, but those fall out here in the February window. So what are we looking at going into this week? Why you let in the pores? I mean, they're watching, but they can't participate in the chat. It's the chat's members only. But I thought the things that we might cover today, given the importance of this week and next, actually the next like 3 weeks in the cycle, are the most important ones as we start to approach this FTD pile up. So something to consider. And I figured having everybody in here would make sure that anybody who wanted to avail themselves of any of this information could. People are becoming too emotional and don't know how to detach those emotions and are using those feelings to lash out at others in a multitude of ways. Yeah, it's pretty common. We're kind of at a crunch point. Theta's ticking down on people's options. I understand. I have a lot of them too. So everyone's feeling it. But you can't let that influence you. If you spent more than you can afford to lose, I'm sorry. I hope the best for your position. I'd imagine that you're probably holding it no matter what at this point, and that's tough. But if you believe the same things today that you believed when you bought those, then you shouldn't be that worried, I guess. You definitely shouldn't take it out on other people. Thoughts on Swiss Bank account? Swiss Bank doubling position at AMC. Just heard this in the market space call. I mean, selling CCs on an AMC run, even if it's like $10, is extremely profitable. So it makes sense that institutions would want to be alongside there. Huge amounts of premium to be reaped off of just the retail interest. The risk on GameStop is very high. The risk on AMC is much lower in that regard, as far as selling premiums goes. Why did you open the stream today? I feel like I answered that. You think they'll open a bunch of new puts on Monday to keep the price down? It's unlikely, given the positive pressure that's expected and closing out of so many puts this week. There's going to be a lot of instability. That kind of tactic only works when our volume can be maintained at a low price and there isn't any like reverse feedback against their position. They started to experience a little bit of that Friday. As we dipped below 100, they began to start doubling down, right, and moving their put position down and exercising their in the money puts. But that positive pressure from those puts being exercised started to counteract that movement, and we pushed all the way up to like 110, putting what were deep in the money puts at real risk, right? And then this week with FTDs and positive buy pressure from GEX, setting up those put walls becomes way riskier. We've already seen them blow out a couple through the last couple weeks where they've sold off puts midday in order to minimize their losses, and so it's already becoming riskier, and then next week it becomes even more risky to do that. You have to remember that that's not something that they want to do if they expect volatility, right? Because if the price runs like $20, their whole position can just get blown out, and that's hundreds of millions some days. Fine, but I don't like it. Is it possible for the futures FTDs can be kicked past early this week? It seems the major GME ETFs have been saturated with shorts already. It's possible, but a lot of those. So If those ETFs are being overshorted, right, and then they're using futures contracts to cover that deficit, then the fails on ETFs would be even higher. Especially going into the ETF futures dates. ETFs regularly use futures to maintain NAV, right? Tungsten. I don't see a way for them to can kick FTDs that are due. Once Reg T's passed, there's really nothing they can do. They can try to push it through CNS, but just it hitting CNS and that volume can create a lot of volatility and buy pressure. And then, obviously they're going to try to internalize as much as they feasibly can. Um, but with CNS getting constantly slammed every day, especially after we hit Feb, after we hit like right here at, what is this, Feb 1st, it starts to get a lot more risky for them to try to do that. Because then they're trying to manage like 4 different FTD positions that are coming in at the same time. And when that volatility starts to pick up, right, that means more variance hedging needs to be done, which increases options volume, which then increases GameStop volume, which then increases GameStop volatility, which means that more options contracts need to be purchased in order to hedge, and so on and so on and so on, like last year. That's like kind of how the Volga Fauna squeeze kicked off, right? Netflix negative correlation is strong. You're saying we have to allow the pours in here the next 2 weeks as well? There goes the neighborhood. No, just today. I mean, most of the things I'll cover on stream, but I wanted to make sure everyone understood what's coming up. If they are in positions, they know how to move them forward equitably if nothing happens. So I wanted to make sure that people got as much information from the stream as they could. I support your inclusion of the pours. I will continue letting you steal my money so that I can keep your lights on and flex. Thank you so much, JC. Guybrush. There's been some vile hatred directed towards the pigeon whales. It's good to be king. Where are all these? Some of the posts saying where are all the options posts now? They haven't gone anywhere. People have been buying options the whole time. They're just idiots. Hypergraphia nonsense. Trying to drum up suspicion by inferring that the people who've been writing DD for the last year are fucking using like psyops intelligence infiltration to break down a community of what I can describe as financially illiterate people. I don't think so. Are you titillated? All right. Why didn't longs holding deep in the money calls exercise midweek to push more calls in the money? I mean, if short, well, first of all, the longs sold shitloads of out of the money puts. And they pushed hard enough to keep those in the money. They sold them at 180, 90. Tons of them. Short puts. So these are bullish plays, and they made sure these stayed in the money. They used the credits from these to buy long calls further out, right? As we saw OI for Feb, March, and April increase over the week. Remember, I told you guys this a long time ago. Longs are never going to pump something that they know will be pumped for them, right? The only way you're going to see longs pump a position is if they're accelerating movement. So, say a long buys, like an institutional long buys a large, like, upward spread, right? And they have, in the money to out of the money calls, and the price pushes up into this and stagnates, they'll pump here in order to continue the accelerated price movement. But they're not going to pump from down here, right? They want to buy down here. They want to buy into positions, but they don't want to pump, right? So they want a stock that's trading flat and then is going to go up. And they want to enter their positions cheap and then let someone else do the pumping for them. It's just like the opposite of short and distort, right? The pump and dump. Feb 18s basically still have a month to go. A lot can happen between then and now. I mean, look how much they went up just on Friday's run from like 92 to 110, right? And IV's now spiked a little more. Uh, it's not like it's going to take a run to 300 to make a lot of those options print, right? They have a lot of time on them. They still have a lot of Vega sensitivity or Vega. So they're sensitive to IV still, they're going to move if the stock does. Imagine buying 1 month out contracts on a run on GameStop. I mean, that's kind of the situation you're looking at, right? If they run up the price and try to crash it again, what is the signs to look for? March crash from 350. You said that lots of in the money puts came in 20 minutes before the price crash. Yeah. Um, you'll start to see a shift in the trend in the options. You'll start to see deep in the money puts coming in, shares getting borrowed rapidly if there's any available on the run. Generally, when we run, the shares available to borrow starts to increase, right? So after this period of shorting, they start to cover. Um, in August, June and March, especially of last year, we saw shares to borrow increase massively, and you'll see those get on the run up, and then you'll see those get borrowed at the peak. You'll see deep in the money puts come in. You'll see out of the money puts start rolling in at the ask, right? So they'll start buying large positions in out of the money puts, and then they'll short the peak and try to push those puts into the money while using the out of the or the in the money puts to apply additional leverage. So in effect, an attempt to kill momentum, right? So that's what we'll be looking for. And we'll be looking for that at every major resistance that they've been afraid of in the past. 150, 180, 200, 225, and 250. A break of 250 is interesting, especially if it's significant. There is a gap fill at 289 where they most likely have order flow that they want to see print, or 291. And that goes all the way up to like 302, I think. After that, FOMO can occur. So really, really, the higher we go, the more unstable it gets, right? Which can lead to newer highs. But yeah, we're going to be looking out for large options flow as we proceed up. And we're going to be cautious, not optimistic. We're going to take every breakout and every resistance very seriously, right? That's the best way to do it, because trading GameStop on runs is very difficult. Is there a low estimate on the total number of FTDs you expect in the next few weeks? The futures FTDs cannot be calculated. We have no idea the swap open interest. If they're using single stock futures, we have no idea how many shares those represent. So no. Even the ETF flow is just an estimate of FTDs that may appear. We'll know what FTDs we get when we see them, right? They can be very low, they can be high. There's just no way of telling. Historically, they've been pretty high, moving into the dates that we're moving into, or high enough to affect price movement. I mean, a million shares of buy pressure on GameStop can raise the price significantly, right? We right, and I told you so, DD. No, it's not worth my time. Well, there's the poors are watching, Elon. But yes, I did address it. Or are you less bullish on the squeeze now? I remember months ago you saying you were 80% confident we were going to squeeze. Friday, you seem much more skeptical. Partially to temper expectations. We need to be aware that, they appear to have the ability to stop a squeeze at this point. They may not be able to. We'll see. Obviously, if the price dries up enough that call options are getting exercised, sure. But I also see a scenario where our price doesn't go high enough and not enough options get exercised and large numbers of people cash settle their contracts, and our the momentum of our run is lost. Uh, like we don't see the retail interest we saw last year. The market's unstable right now. Um, a market crash isn't good for us, I don't think. So if the market starts to crash, I think that could turn around our momentum. Remember, these guys are short basically everything. So if everything's tanking, their margins go way up. So while I'm confident in a run, I'm not as confident that it'll be enough to squeeze. It may be, but I mean, that's always been unpredictable, right? Like, there's no way to tell if it actually will or not until we're in it. Give us a quick rundown of what we're looking at for the next week or two. All right, so going into this week, I discussed earlier, we're going to start to see some positive GEX pressure on the price of the stock as market makers de-hedge from the exercised puts from last week and the exercised calls, which were most likely hedged already. Most of them were pretty fucking old from when GameStop was trading way below $100. But these puts that they were exercising will apply pressure. The puts that they cash settled will also apply pressure. So this is good. Going into Tuesday, we have futures FTDs that begin rolling in on the 25th. In addition to that being the T+2 day for this week's options expiry. There's also potential for gamma exposure from ETFs and their leap contracts, right? Especially these are more likely to get exercised than they are to be cash settled. Most ETF leaps are institutionally owned, and a lot of those ETFs have seen a lot of improvement over the course of this last year. As we move forward into the end of this week, I think we'll have a price spike and probably a drop into end of week towards whatever max pain levels off at, and then positive price improvement out here from Feb 1st through Feb 8th. Even though FTDs kind of continue out further, I think this overlapping period between Feb 1st and Feb 8th is the best bet for price improvement due to those FTDs. Those are futures FTDs from ETFs. Those are FTDs from creation. So that's kind of what I'm looking at. So let's see how that would play out, kind of. So I'm looking for price improvement Monday through Wednesday of this week, with a drop off in volume and volatility into Friday, with and then for price improvement to start improving on Feb 1st, with spikes on Feb 3rd and Feb 8th. Now, as far as rolling forward options contracts, as I stated before, I was looking at the 25th and 26th to move forward my contracts. If this is going to be based on how much improvement we see over the next 3 days. If it's minimal, if we see like a test of 150, then I'm going to like roll a lot over. If it's a lot, like if we move up into the 200s, 220s, then I'll probably only roll forward my out of the money position, which I will cash settle. Same headphones. Do you think they're counting a continued market correction to keep us down, or still too many FTDs? I mean, we inversed the market the other day, right? So if the FTDs are significant enough, I think that, I mean, the times when they're covering tend to be the times when we have negative beta as well, Gen. So like our big spike in negative beta last year was from last January. And I want to address one more thing from Herva. Uh, Even though all the things are in place that were there last year, we don't know how the illiquidity of GameStop will react to the lessening of those factors, right? So we have less retail interest, we have less, delta that needs to be hedged on the options chain, but on the flip side of that, we have more volatility and more illiquidity in the underlying. So it takes far less volume to move us an equivalent amount of dollars, as far as price improvement goes. And so this really leaves us kind of in an unknown space. We can't predict the upside movement because it's so volatile. And we also don't have the FTD information. Like there's no way of us like estimating the number of FTDs until it's reported, right? So we just kind of have to wait and see. And so I guess, yeah, if I seem less full bowl, it's not because I am, it's just because it's an unknown, and speaking on it's kind of pointless. I don't know. There was another ETF. Not all the ETFs are going to let them just go crazy with creation, right, Tungsten? Like there are specific ETFs that seem to allow them to do that. But they'd all be reg shared at this point if they all allowed it. Like Vanguard and BlackRock are going to let them do that. Um, they'll let them use creation to a point, right? But they can cut them off. Doesn't Vanguard have earnings soon? Hmm. If you had one nugget of wisdom for us to drill into our thick skulls before this upcoming few weeks, what would it be? Don't be afraid of profits. Those willing to exercise, would it cause most pain to short hedge funds to exercise on 125, 126, or roll take profits to exercise later in Feb? I mean, It depends on how hard we run, right? Uh, the thesis of exercising options to put additional pressure on the short hedge funds means that those options are already way in the money, right? Because we were discussing things like cashless exercise and exercise and sell to cover. And these strategies require that the price be high. And that's what we want. We want a high price because we want them to have to cover that additional delta at market, right? Because they haven't hedged appropriately. The idea of exercising is to force them to buy shares of GameStop, when these 200 Cs are backed by an underlying trading at like $400, right? And so forcing them to go find shares at a higher price point. If the price doesn't get that high, then exercising's not as useful, right? And so yeah, you can roll forward and wait till a point when price is that high while maintaining delta pressure. Um, you can take cash out and just buy more options. You can take cash out and buy shares. If the price doesn't hit those numbers, the point of the exercising is to get basically free exercises, right? Like we're trying to run it when it's peaked. So when we hit whatever peak we hit, and they traditionally short that peak, right, to try to lower their cost basis on long-term short positions, the exercising at that point puts a massive amount of buy pressure on them, which can break their ability to suppress a squeeze or to stop a squeeze. But if we run to like 200, what are you going to exercise? I mean, if you have 100 calls, sure, but I don't think most people do. But remember, it doesn't really matter when you do it. If you exercise while we're running, they still have to find shares. So it still applies pressure, but that's that peak point. That's the place where it applies the most, when the price of the stock is very high. Because then even if they try to satisfy it artificially and the price is continuing to run, then they're going to lose that arbitrage in addition to, the losses from whatever they didn't appropriately hedge. You think ETF should... Another question would be, entropy swaps are influenced anyway by the OI of the call put chain, essentially IV, but for the entropy swaps. Um, Possibly. Do you repeat what points of resistance, conservative peaks we're looking at, being aware of this next week? Yeah, I talked about them earlier. I think to the upside, probably from where we are, 125, 150, 180, wherever our VWAP is at the time, which I think is around 190 something, 200, 225, and 250 are the upward resistance levels. So, these are easier to break, and then obviously it scales and gets harder to push through these. Volume drops off at some key points here. So these two levels are historically hard to break through, 180 and 225, because volume at those levels isn't very high. People get excited about 200, but they're less excited about 225, and then they get excited about 250 again, right? A breakout of 250 could begin some FOMO. A break of 300 would cement it. How much do you think next? Sorry, hold on. I skipped one. Do you think they were witnessing the start of forced liquidation across the market. Um, Possibly. There was a lot of a lot of call interest that expired on Friday. And I think we're definitely going to see a pretty volatile market this week. Leaps in the beginning of the year are always pretty crazy. So, but a little extra so this time because of all the liquidity that came in last year. Are we getting rich this week? Maybe. Do you think last week's down market was solely due to SLD? Hold on. Sorry, I think I missed some here. Yeah, I turned on the closed captioning. It put a delay, but it puts a delay on the stream, so I still don't want to use it during trading days. Hold on, I missed like a whole shitload of questions. Q go over optimal exercising strategies for salmonella. He can't be here and was wondering if it follows the same exit strategy as the DD. If we squeeze, Freebs, maybe kind of expand on that question. Multi-story buildings on fire in Philly, pretty Susquehanna, if you ask me. Can you talk a little bit about suspected margin calls, first liquidations, end of November versus Netflix Piton dips? It's possible. I don't think Peloton's dip had anything to do with a margin call. It was, but Netflix's was suspicious in that it occurred after hours, and it was just such a great extent. It was a big sell-off for a miss in subscriber numbers. I understand that Netflix has a lot of growth priced in already, and that it lost some of that. But we'll see how sustainable it is. I mean, the media representation on Netflix is already flipped, which makes it seem even more like it was a margin call. And with all the options coming up this week, it really seems like somebody could have benefited by dropping the price of that stock very, very hard. No, definitely not 550 weeklies. Focusing on potential roll. If Feb 18 200 300 strikes are 80-95% down, what are your thoughts on minimal return on rolling versus holding leverage for FTD volatility? I mean, you still can maintain leverage if we move up, right? Hold on. And you have like Feb. What was your just use one of my cost bases for them. So Feb 300, Feb 18, 300C. Let's see. What's my average on these? 39. And then our 40% IV bump. These could start going in the money around like 150, right? Like profits can start being captured on these even sooner. They're not dead. Don't forget they still have a decent amount of theta on them. So if we start to see some movement this week, there's a good chance, especially a test of like 180 or something, that those will realize very good profits. You'll have a limited amount of time to get out of them. But that 80-90% down can reverse pretty quickly. Even at a higher cost basis, say you're, in those at like 5.85, a test of 150 will still show some profits on those contracts. And that's like the low for expected movement, probably is around 150. I think a snapback to VWAP is more than possible. You know, like that weighted VWAP at like 190. Do you think higher out of the money puts are sufficient to suppress the price at those points? You mean in the money puts? The reason they buy in the money puts is because they have high delta. So they're like negative 0.9 or 0.1. And this causes the market maker to short 90 or 100 shares, right? If we get, say, $100 price improvement, will you keep your near the money calls as well as newly in the money calls, or sell out of the money and roll those profits since they can short it some between the heavy FTD dates? That's exactly what I intend to do. So I was going to go into this. I'll go into it now. So basically anything I have Jan 25th or 26th, I'll wait till the 26th. You know what? I'll say it now because I'm probably going to. I'm going to wait till Jan 26 because of that third day exposure that's possible on the T+2. So I'll wait till end of day, Jan 26th. Unless there's a massive price improvement on Jan 25th, I'm not going to make any moves then. And then anything in the money at that point or deep in the money, I'll probably carry into the FTD exposure as long as there isn't a massive amount of slippage. Anything out of the money on 1 to 5x improvement, I'm going to roll forward to March. So I'm just going to cash settle, take my profits and buy contracts in March. Because that way I can take, you know, what, even if my profits are minimal, right? My cost basis is preserved by doing that. And I can move those out into either less risky calls for March, or I can move them into more leverage for March. Either way, you know, an improvement on the position I have now, right? Thanks for having my back when I dutifully shamed Nutsaculon. That meant a lot. If Jimmy announces some form of huge announcement, like the speculated NFT marketplace, what do you believe the effects of this cycle would be? It's hard to say. I don't know how the market would react to a GME announcement. I don't think we're going to get one. I think that's hopium. I don't think we should plan on it. If it happens, we'll figure it out. But I suspect that they aren't done with what they're working on. And an announcement before they have a completed product could be harmful. There's been a swing at media sources either tripling down on bashing GME or coming around and claiming it's not a conspiracy. Do you think this is their last chance to give positive sentiment? I think they're riding the fence because they don't know what's going to happen either. Who's they in this scenario? People with short positions on GameStop or interest in short volatility or short the underlying. So it's only a $50 to $100 run up through 126. When is the expected continuation of positive price action in February that you would hold your in the money at the money Feb 18 calls for OPEC's settlement? The in the money at the money, I would be waiting for this price movement through these FTDs. You know, this is where our like November 3rd date lies from those ETF FTDs. And so I'd be waiting for those in the money. Like, if we push up to 150, I have hundreds and 110s right now. I also have 120s. I have 140. I have 150s. I think I have. Do I have 160s? I'm not sure if I have 160s. Hold on, let me think. Did I skip 160? I don't think I have 160s. I think I have 180. No, I do have 160s. I have 160s. I have 180. I have 200. And then I have like 220s, 250s, 300s, and 350s. So basically, whatever we push up to, 10% below that is getting rolled forward. So say we push 150, I'm going to, like, anything 135 or less, I'll hold on to. And then I'm going to roll forward everything else. And then those 135s or less, I'll hold through this window because we can see more price improvement there. And then also, once they're in the money, theta decay becomes less relevant. How come ETFs such as XRT have their short position constantly changing by lowering the numbers of the baskets? It's like changing the denominator in a fraction to fudge the numbers. Yeah. That's probably a better question for a turd than me. Um, but yeah, they you're not wrong. It's it shouldn't the shares outstanding shouldn't be fluctuating at the rate they do. Something that's been bugging me for a while. Everything I see regarding Reg Show Rule 204T says APs have T plus 6 for delivery, not T plus 3, then T plus 6. Where did T plus 9 come from? Oh, Jesus Christ. So it's T plus 3 till the trade even settles. Then they have T plus 6 to fail or locate. So this isn't actually a T date. This is just how long the creation process takes from creation till redemption. And it has actually nothing to do with the failure period. So this is their creation process, and then whatever gets kicked out on the end of this then goes into the T plus 6 period that APs have, and then Reg T after that, right? And this is where the point of confusion is how long it takes for this creation redemption trade to settle isn't even the right word for it. Mark the trades, like the creation isn't marked until T plus 3. And that's why we see those ETF FTDs flow in on T plus 9 plus 35 from the point of creation. Dave of the Pigeonwheel Daves. If you had one nugget of wisdom, don't be afraid of profits, popcorn trader. I think I answered that when you asked it the first time. Would it be safe to say we might not see GME ups until the basket stocks start getting pumped? Is it really cheaper to internalize buy pressure than let the other shortened positions see price ups? I'd imagine if we see GameStop go up, we'll also see the rest of the basket go up. I'm not really sure what you're asking there, Trey. Like, I mean, the internalization will only last so long because it creates more and more tail risk the longer they do it, and so it has to print to market. I'd imagine that they're probably done internalizing as of Friday. They accomplished what they wanted to, which was to reduce gamma exposure into this coming week. they got a little pushback on Friday and thus had to create a little bit more gamma exposure Thursday and Friday. And by exercising those puts, I'm sure they didn't want to, um, but it was there anyway. Do you have a plan to play the downside of MOS? Not really. FOMO won't occur if we hit 200 this week. I mean, it might not be enough. It could be. But that's fucking completely unpredictable. We have no idea when, media sentiment will shift. Like, it's not like we've tested 350 and 250 multiple times in the last several months with basically fucking zero news, right? So if the media is not pushing stories on GameStop running, then we're not going to see like a large amount of public FOMO now. We'll see maybe institutional FOMO on a test of 200. When the stock reaches new highs, I'm thus in a state of uncharted price discovery. What are some tools we can use to help with price prediction besides fibs? Fibs are fucking useless in a squeeze too. There's nothing. Absolutely nothing. You can just follow trends and hope they stay strong. Volume is probably your strongest indicator. When do you expect all internalized buy orders roll to the lit exchange? I have no idea when they're going to dump them. Again, some of these questions, like FTD counts and when does internalization end, it can't be answered without inside information. We don't know what their risk limits are. We don't know how much tail risk they can take on. We don't know how much tail risk they've already taken on. And we don't know the number of FTDs that will churn out from the futures, and we can only estimate FTDs from ETFs. And then we also have no fucking clue what market maker FTDs would be, because we don't know where they've hedged with real shares or where they've hedged with synthetic shares. We do know that the number of synthetics they use seems to outweigh the number of real ones they use, which implies illiquidity, which is pretty obvious based on our volatility and our bid-ask spread. We'd be willing to create a resources page on Discord, basically somewhere to post useful links to rule filings, good sources of information. Yeah, I could do that. I feel like, don't we already have that? Isn't there like a DD discussion channel or some shit? I mean, everyone can just make a fucking thread. What were historical FTDs last year coming into this week? Much lower. It's well on the ETF side. GME FTDs were much higher. I don't know the specific numbers off the top of my head. GameStop was on Reg Show at this point last year. But millions. There was millions of FTDs on GameStop. Do you think last week's down market was solely due to SLD or suspect something else? Seems like a big down just for SLD. Does it? I mean, there's other negative news, right? The market's afraid of a rate hike. The Fed's probably going to hike rates, even though I don't think they should. Um, I'd like to see them do it just because I want a big correction because I have a lot of short positions. But um, honestly, like most of the inflation coming in is due to supply chain issues and not really like inflation. Like so the inflation being caused is being caused by supply chain issues, and it's specific to like sectors like oil and gas and like used automobiles, and that's because like the supply chain issues are preventing automobile manufacturers from meeting their manufacturing quotas. And so with such a significant amount of the inflation coming from those sources, I really don't think a rate hike really benefits us until the issues with the supply chain are solved. And more truckers, better flow through the ports. But I think the Fed's going to hike rates at least once anyway. I think there's a lot of political pressure for them to do so to address this inflation, but I think the cause of the inflation is misunderstood. So I think they'll do it and then like a small hike and then sit back, let the correction happen within a limited range. And we'll probably go back to like a slightly less bullish market, but more solid growth afterwards. As soon as the supply chain issues start to clear up, I expect we'll start to see growth in the market again. And a little less fear. And so I think they'll do a rate hike and then like I don't think they're going to do 4 or 5 rate hikes this year. I think they'll just do one and kind of sit back and act like that was enough, or they'll try to at least. Nope. Because not only I suspect this is true, not only are there obligations to ETFs currently holding GameStop, but I have a lot of reason to think that there are obligations to ETFs that no longer hold GameStop. Due to futures positions. And so there's no fucking way of figuring out how many FTDs are due. 0. Because that requires knowing what amount of fails occurred due to futures or other derivatives. And we just have no insight into that. I know everyone wants to know like a count, but there isn't one. There's no, you can't pin down a number that's accurate. We know they're up. Like our best indicator was the report that we just got from the T+2 of futures FTDs. That's and it's higher than last quarter. So, and that was enough for, I mean, we saw a pretty significant price improvement in the last anomaly window, which is what we're in, right? Because they failed to roll forward futures contracts. I think we went from a low in August of around 152 and ended out that anomaly window in November at 250. So, I mean, this positive price pressure we saw from August to November, that was our anomaly, right? We had FTDs come in on October 6th, October 13th. We saw ETF FTDs come in November 1st, 2nd, and 3rd, where we saw our first spike up to 250. And then, the cycle settled until we started to run up into the OPEC state in November. So I'm thinking we're going to see the same starting now. The drop-off period that we saw in August, bottomed us out at around 166. This one's bottomed us out around 100. So the upside could be a bit different, right? But this is the big period of FTD flow that we're entering. And so, yeah, I still expect to see price improvement. Similar to our last reversal here, but at a greater magnitude. And a lot of people are wondering, if this ended in January, but I don't think so, because I think a lot of these things were in place before January occurred. I know there's been some speculation in the bear den as to whether or not like they rolled into futures contracts in January, but I think the fucking contracts already existed before then. We have the cycle, we have evidence of the cycle occurring way the fuck back. Um, at far less significant numbers. There was a much bigger float. There was far less interest in the stock. It wasn't nearly as volatile. It was super liquid. So the illiquidity drove this cycle to the point where we could see it. And then after January, much more so, right? But it was always there. How does Netflix play into all this for the coming week? It doesn't. I mean, if someone got called on Netflix, it may have absolutely fucking nothing to do with GameStop at all. There's some indication. I mean, there's a lot of the longs on Netflix in the last 13F filing are also short GME, so that could be something. Um, there's a lot of circumstantial evidence, but nothing to tie it directly. Like it happened, Netflix dropped on the exact FINRA 60-day window that they had to extend a margin call due to illiquidity in the spot market. So it may just be that they needed the money and they dumped a position in order to meet that call. You have to remember, a margin call is not like a definitive liquidation. They're called and then they have time to meet the margin requirement, and if they don't, then they're liquidated. So it could have been them, selling off Netflix in order to meet that that call condition. Sorry, I know I'm like 30 minutes behind in chat, but I want to get to everyone's questions. Did you see Yelya's bearish post? Yeah, I know all about it. Don't forget that Yelya's indicator, like all oscillating indicators or anything that tracks past data or data that's already occurred, is not forward looking. So it can reverse very quickly, especially after the massive number of puts expired Friday. Delta neutral is going to shift. It's probably going to shift to the upside. I don't even know what max pain is for this week. Let's take a look. Nope. Was that for this week? So max pain, much more heavily call favored this week, right? Like we're down here, but 126, a break of 126 basically just starts a gamma ramp. I mean, this looks like a gamma ramp to me. This is good. It's going to take some effort for them to keep some of this from getting hedged. So the same way we gamma squeezed down, we can gamma squeeze back up. Sort of. I don't want to call it like a gamma squeeze, but it is in a sense. I don't think is less retail interest, not at all, than last year. What do you mean bear power? If future FTDs are at least one float, we moon next week with volatility, right? I mean, yeah. If there's a float worth of buying pressure, we would obviously moon. It doesn't take much. I mean, I know some of these numbers don't look as crazy as last year, right? Like we don't have like 8 million FTDs a day. But we don't need 8 million FTDs a day to see massive price improvement. And because so much of the call chain is out past Feb 18, and it really is. I don't know if this is an influence from the information I've put out, but it's also institutional interest in April, March. This isn't just retail buying, right? And so with so much of the chain far out, and them having to cover here in the near term, this is going to apply, these options positions are going to apply a ton of pressure to any upside movement. At some point, GameStop must defend the stock with more than just tweets. I don't agree with that. I don't think they need to do anything. And they're not defending the stock with tweets, right? They just need to improve the business. And they have, and they will continue to do so. Don't forget that that's their entire C-suite's pay that has tanked. They're going to do what they can to turn that around, right? Because they want to make money. That's why people do things. Are you able to predict price per volume from illiquidity? Absolutely not. Bid-ask spread is variable. It changes all the time. Our bid-ask spread on a run can range anywhere from like 30 cents to $3. It's about as unpredictable as the stock market gets. We just know where points of resistance are and prices they like to keep us off of. We can use OI on the call chain. Obviously, they don't want large blocks of calls going in the money. So that's probably our best indicator of where they'll try to stop price movement, is short of those calls going in the money. How far forward are you rolling? Just to March 18th. Past the OPEX window. Price is high comparatively last year day to day, so this is a huge factor when they need to flip the entropy swaps and other tools they use because they're straight up unprofitable from the previous. Well, if they do, that's a whole nother thing. Like we have no idea what swaps and stuff they're going to try to enter, and they may enter those swaps based on price movement. They may have entered some of them already in order to ride the long side of price improvement and offset their losses from being short volatility. Entropy is about where it was last year, before the big run. So if they are using like entropy swaps are quarterly, so if they're using those, they're using them to dodge price improvement. Or to at least hedge price improvement. So we've had far less retail buying, but we have more retail eyes on the stock, perhaps waiting to FOMO in once a move has occurred. Wait, hold on, I lost it. Where did it go? Oh no. Oh, here we go. If mouse kicks off. Nope. How far back am I? Sorry guys. It keeps like jumping forward when I scroll down, and I gotta find where I was. Do you see this price cycle as more significant, or the one that starts February 22nd? I mean, Feb 22nd, like the Feb OPEX is just it's known, right? Like these tend to be within a range of like $50 of price improvement with a spike in volume. That was true for August. That was true for November. November, they hedged in advance, then spiked, and then dropped it. August, they just spiked it and then dropped it. So we don't know exactly how Feb will play out, but Feb will likely equal price improvement. But that's already been a factor. That's not part of what we're looking at. It is in relation to how high we go into that OPEX state. Like, if we go to that OPEX state trading at 250, this state becomes far more important, right? Whereas if we go into it, we enter it like trading at 150, the price improvement from it is probably not going to be very substantial. The OPEX cycle remains, right? And then OPEX will either turn into that rollover period where we see a lot of price improvement going into CME expirations, or a failure where we see no price improvement going into CME expirations. In fact, the opposite. We don't really know how OPEX will play out. We do know last year, February, they rolled. And there is some cycle there. September and December, both years were fails. They failed to roll forward. And last year, February, well, I guess it's actually March and June, they did roll. So there could be a semi-annual cycle here, but we need more quarters to figure that out, right? So, September, December of 20 failed. This is 21. And then September and December of 21 failed. But that only leaves us with 1 point for the upcoming March roll. So March 22, we don't know yet. They could roll again, and that would be a significant price improvement, right? What are the most bullish points that indicate next week's run? I would say the things that I'm most bullish on are the futures FTDs coming in and the GEX. I still think, even with all of the effort they put in and dropping the price, I still think ultimately they didn't drop it as low as they wanted to. I think we still closed out this January over last January at the same date, right? Did we? Hold on. So it was here, Jan 22nd, and the price was Jan 21st, 22nd. That was the equivalent. So we still closed $50 above the equivalent date last year. Or what was Leaps last year? Was it on the 15th? Hold on, I gotta look. 1 second. I think Leaps were earlier. No. 22nd. This would have been the Leap date, right? Or were they the 15th? January 15th. Hold on 1 second. Let me look something up here. Oh, where's WeBull? I just need to look up the expiration calendar. I want to make sure I'm right. There we go. Yeah, January 15th. So we closed $50 above where we were last January on Leap expiration. Okay, zoom in on this. So index equity Leaps expired on the 15th this year. They expired on the 21st. So when people are comparing these cycles, they're not exactly the same. And if we look at our price improvement last year after Leaps expired on the 15th, it's pretty drastic. So, the cycle doesn't align perfectly with the previous one. in some regards. And then also because the ETF FTDs are a larger amount of exposure than the GME FTDs, that kind of shifts the cycle forward a little bit into that, like where like the peaks of this cycle could be here in between like Feb 3rd and or Feb 1st and Feb 8th. I'd feel pretty bullish if I was already holding 110s and 130s hacksaw for this week. Although I feel like anybody that was buying 128s was being a little bit greedy. But I think we'll see some price improvement. There we go. Is it worse for their margin to internalize buy volume here around 100 or let the price run 200 without internalizing? I'd imagine the original short position doesn't like the latter option. I mean, it may not, but if they've moved into like a delta sensitive position, then they don't care if the price moves, right? So my options broker doesn't allow for sell to exercise in the UK. Would the best pressure I can apply be to hold the contract and only take profit to avoid losses? I mean, no. The best thing you could do is sell the contract at maximum profit and then just buy shares, right? Effectively increasing your shareholding. There's nothing wrong with that. Like, especially not long term. People are going to cash settle options. Like, it's not all the options are going to get exercised. That was never part of the plan. Whatever options do get exercised, awesome. That applies additional pressure, but they don't all need to be exercised. You could just sell them, buy shares, and fucking DRS them or hold them or do whatever the hell you want to do. So far, we've had less retail buying, but we've had more retail eyes on the stock. Perhaps waiting to FOMO in once a move has occurred. Let's hope covering induces a large initial spike. Hopefully, yeah. I mean, that's what we want to see. We want to see like a violent run up that gets people all excited. I don't think we have more people paying attention to GameStop this January than we did last, but we do have more than we did the rest of the year. How high? What? How high can we go? Why does everyone keep asking that? There's no answer. We have no fucking clue how hard it'll run. As long as we buy back in as close to in the money as possible, closing calls will not affect GME negatively. Yes. As long as you're able to roll up your delta, then no, it won't affect it negatively. Feb monthly options expiration is on the 18th. So T+2. So the OPEX window is the 21st through 23rd, I believe. Let me double check that on my calendar. 1 second. Yep. 21st through 23rd. No, Hacksaw, I can't hint to you guys what to do with your positions. Charlie's it's full mainstream Wall Street saying Wall Street has all under control. MOAS years away. And if MOAS is years away, MOAS will never happen. Charlie's is an idiot. I'm not even. How much stronger do you think upward potential momentum is this year with extra liquidity in the market? The lack of liquidity in the stock and the FOMO anniversary media exposure. We don't know. If this entire stream is just going to be people asking me questions that are how many FTDs there are and how much can the price go up, it's going to be a waste of time. We've been a while since I asked anything on the stream. Shout out to the options crew, 510 crew. Questions for you. If on 3-1 we're at 50 to 70 with no price action over the next month, what then? On March 1st, if we're at 50 to $70, that doesn't seem likely. Without a market crash or a super steep correction in the coming weeks, which should happen long before then. Any plans to take a put position sometime in early March at a theoretical peak to hedge against the downside of the next cycle? Absolutely. If we do not experience a squeeze type environment over this coming month and we move into the Feb OPEC cycle at a low price point, I will be playing the short and long side of every cycle moving forward. So I will be playing the run up and the run down equivalently, and maximizing gains on the stock over the next year and improving my long position in shares. At least till June. June's a leap date also. There's a lot of pressure in June. Not as much, but it's a lot. Do you see any broader market implications for the VTI FTDs? Oh, the like $500 billion. Yeah. ETFs don't really squeeze in that sense, though. I mean, they get covered and their value goes up, but like they don't really. It's not really like a short squeeze because their floats are variable, right? XRT 9095's Feb 18th worth keeping still, or should those be rolled? That's kind of a different question. See, I think the most likely time for XRT to run is in this window where that big FTD exposure overlap is for ETFs. And so I guess you could roll them out to avoid a little theta burn. I've been averaging them down a little bit. I have some 80s and 85s now, but not a lot. I mean, it's not like a big play. It's just like a side thing. I think it'll just kind of run with GameStop, but the contracts were way cheaper. Yeah, the IV bump is indicative of a run. Usually, as IV increases on GameStop, it implies that there will be a run coming. Generally, pricing most people out of any far dated contracts. IV currently higher than it was in November. So while your contracts don't have a lot of like delta value right now, remember that as that delta value comes back, the IV is already significantly bumped from where many of you bought in between 80 and 90. Like a lot of you guys that have been holding these contracts for a long time bought in at like 80 to 90% IV. And remember that acts as a multiplier on the value of the contract. So while your delta is low, this IV increase isn't really being realized. But as the delta comes up, that multiplier is gonna act out on the price of the contract to a greater extent. Someone burnt the fuck out of something. Jesus Christ. Thoughts on buying NVIDIA or AMD at these low prices? Thoughts on SPY calls a month or two out? I would wait for the FOMC meeting. I might go long like TLT, depending on the like long at the money on TLT, depending on what comes out of the Fed meeting. If they do a rate hike, if they don't do a rate hike, the market could rip. I do think a lot of our current correction is due to SLD, and so Monday could be volatile, but I kind of expect the market to start to recover. We'll see how that goes, though. There's some fear now, and that changes things. But no, I wouldn't be picking up calls on the SPY right away. If the market starts to bounce, it'll probably bounce a decent chunk, so you'll be able to confirm the shift in trajectory. But I wouldn't try to get in advance. It's unstable. As we move towards less bullish sentiment, you have to be a lot more careful with your entries. Just today, best little studio. I wanted to make sure that everyone got to listen in on the questions being asked about this coming week. Um, this week, too much potential volatility to do pickles picks. No, I have a couple that I'm looking at. Uh, well, like three that I'm kind of interested in, and then also like a little talk about portfolio hedging and VIX coming up with these unexpected moves in the market and volatility picking up. Jesus Christ, am I still 30 minutes behind? No, Hacksaw. Um, I've covered this on stream a bunch. Maybe you missed it, but ETFs like IWM, and I think one of the reasons we still track with stocks like AMC, which we're basically unrelated to in every other way, can hedge their negative position in GameStop by using forward futures contracts. So if they have a negative balance of like 50,000 shares of GME owned, they can, go long on a futures contract for 50,000 shares of GameStop, right? And then, report their NAV as even though this is due. And so when this contract comes due, that can those shares can be then returned to the ETF. The ETF can then sell them, but the process of them being bought and returned drives the price of GameStop up, especially if they're failed, right? So essentially, they create a neutral balance. But I think a lot of those ETFs that GameStop was formerly in still have uh, debt, essentially, or those APs still have debt to that ETF that is due in the form of GameStop shares. I almost think we need more institutional disclosure. Yeah, but that's not a change that we're going to affect immediately. Um, when you sell on 25 or 26, what date are you waiting for before buying out further? I'll probably wait for a little drop into the end of the week before buying into the March calls. Two 24-21 run lines up pretty well with the 115 leap expiration. Yeah. No, it doesn't. Nope. Way off. The 224 OPEX run, or like 222 OPEX run, or the last year's lines up with the OPEX date. I'm confused what you mean, Pong. Maybe your leap expiration. Oh, for the FTDs, yes. Some of those FTDs were due during that February run. There were a lot of them too, right? Because GameStop A lot of exposure was created during the run in January. I mean, the only extra members in here are Cornishons. It's not like we're getting like membership FOMO, right? Hey, 7 month Dillionaire, free super chat. Cool. Thanks, Lugs. How turgid? Half mast. Given the FTDs, the only thing certain is that the price will reach Jan 28th levels, as DFE said in the Home Alone video. So we're at least reaching for that level as a springboard. Is it possible shorts to try to get through the cycle through a call spread? I mean, they just use swaps, right? Could the puts have been a way to mask their intentions with the OMM by appearing to straddle? It could be that they dropped the price as hard as, I mean, that would be the presumption that there's nobody long on the stock. And then yeah, they could have just dropped the price in order to load up on out of the money calls to protect the upside. It's possible. I don't disagree that it could have been, that the same puts sold as the ones bought were all one entity. Hey Greg, what do you have for dinner last night? Nothing. I didn't eat yesterday, I don't think. Did I? No. I didn't eat today either. I should eat something. Thanks for reminding me. But if VW could squeeze to what it did, then who knows? Yeah. Volume goes up in a sustained way on the upside of a squeeze. It doesn't generally fluctuate a lot because there's constant buy pressure. Thoughts on S-Bub? I have no idea what that is, man. S-Bub? What the fuck is going on? Oh. Hold on. Can you describe the proper timeline for buying contracts to play both the up and downside of cycles? Like you do, like when do you buy the puts versus the calls? I mean, you try to buy the puts at the calls at the low, and you buy the puts at the peak, right? So you probably buy the puts before you sell out of the calls, unless you don't have enough capital to leverage that. In which case, you would just buy after the peak, but you'd buy out of the money. You need, and for the cycles, you need like much shorter time frame calls than you need puts. You need long time frame puts. Like I bought, I bought a bunch of April 180 puts when we went into earnings last, and I sold them at like a test of like, I sold them like the next day just when the price dropped. I thought we would be turning around. Obviously, if I'd held those April puts until now, I'd have a bunch more money. But that didn't happen. S-Bub. So yeah, the put time frame is much longer, so you have to buy like further out puts. S-Bub, SBUB. I don't see an SBUB on here. Yeah, I'm not sure what ticker you're talking about. Batbones. I think DRS will make a difference this year versus last January. Maybe. I mean, could help illiquidity. They've got to start, for DRS to make a difference, they need to start borrowing stock, which is not something they've done, right? They need to borrow from the lending pool. And that's when DRS makes a difference. But as long as, our fucking rate is like down here at 0.8%, then DRS really isn't doing anything, right? It's when they go to hit that lending pool and get shares, that's when DRS matters, because there's less shares available, right? Congratulations on your first home, Carl. Look at you, living the American dream. If MAT200C are still out of the money by the week's end, are they worth rolling at a loss? I mean, if the price goes up, the price of those contracts is going to go up quite a lot, Dominic. If we don't have a move, then yeah, you need to roll them at a loss. But hopefully we see some price improvement this week, right? Like that's the plan, is that we see price improvement and that pumps value into our contracts that we can then roll forward. And everyone can stop whinging in the Discord about their losses. That's about Jan 28th calls spiking 100% at end of week. Yeah, they went up a bunch, huh? There's a lot of them. It looks bullish. That spike is indicative. That spike and closing green on Friday are two of the factors usually I look for to indicate a run the following week. Owen, the last one being a close above max pain that we did not see. Although I would argue that near the end of Friday, max pain was probably pretty close to where we were or below, especially with those puts being sold off. What's the best indicator? You're not going to find one unless you make it, Stefan. Do you think DRS will make a difference this year? Some off-stock moves. If we're going for a recession, what do you think will happen with GameStop? I mean, GameStop should actually be pretty well padded against a recession. They're a retailer, right? Retailers don't take on any of the costs of manufacturing, and so they're not super affected by inflation. They provide, they sell entertainment products. Entertainment is generally something people spend money on in a recession. Video games, especially. We don't have a lot of historical evidence for video games, obviously, but video games, like entertainment value per dollar spent, tend to beat out things like movies or I don't know what else people do for fun. Whatever people do for fun, video games are a better investment for the amount of fun per dollar spent. So I think that's good. Especially, with larger entities like a lot of their competitors possibly suffering because they are so large, like Amazon. They'll be far more affected by a decline in the economy than GameStop will, because GameStop's very small and so a little bit more insulated. I think, based on their statements in the last earnings, that they're preparing themselves for more supply chain shortages. So that'll be good. When supply chain shortages lift, that'll be very good. Especially if they have some of their e-commerce and like order fulfillment centers up and running. But yeah, I think retail, with a possible decline in COVID over the coming year and improvements in supply chain, even with inflation, I think GameStop will be fine. I think SPY will go up on Monday next week. Maybe. It's hard to say. It could still drop Monday and then see some improvement into the middle of the week. Sam Jones, thank you so much for becoming a Dillionaire, dude. I appreciate it. Hit me up on the Discord. I'll get you added to the country club.
Yo. Let's get it. We're not a cult, yo. Just some pickle fiends, fuckers, not a cult, no. Like them AMC suckers, not a cult, bro. We some GME lovers, not a cult. Not a cult.
Poker. I think we're gonna test 230 this week. Okay, so like I want to see a test of 220, right? I want to see us get a nice bounce back to at least like the low end, and a possible overcorrection from VWAP, right? So yeah, I'd love to see some volatility spike to the upside of our weighted average price up here in the 190s. And I don't think that's impossible. But where we're at now, its probability is low. You know, we need to see price improvement above 220, above 150. You know, if we go back and look at our max pain, our break point's really at 150. If we can cross 150, then the sky's kind of the limit. But I mean, this needs to be our like conservative target, is in this range, because they will do what they can likely to keep the price from breaking through here, unless they have in fact shifted to like a delta sensitive position, or they're long the underlying for this run up, like they've hedged the long side. And if that's the case, then they could just let it rip. But if it does, I mean, you can see that this can quickly get out of control. So yeah, I mean, a test of 150 definitely improves the chances of a test of 230. A test of 230 improves the chances of a test of 300 and 350 and 400 and so on. So you can't look at it through that bullish of a lens, because first things first, right? You're kind of, by doing that, you're kind of promoting like false confidence, and we need to just promote what we know in this regard. And like we know that there is a good reason for them to try to keep it under 150, and so that's where we should set our expectations first. By testing 150, by breaking through it, then we can start to set our expectations a little higher. It's dynamic. You can't just statically predict the upside, especially on GameStop. You think they might be lowering the price to also lower the market cap for GME to get out of the Russell 1000? I've speculated that that's possible, in order to get. Now, don't get me wrong. In the short term, that'd be very bullish for us, right? Because if GameStop got downshifted into the ETFs that was in previously, back into the S&P 400, back into the Russell 2000, then that would create a lot of buy pressure from ETFs, as GameStop would be much more heavily weighted in those indexes than it currently is. But it would also be bad in that they could probably go back to that system of heavily using ETFs and not really creating too many FTDs in doing so. So long term, it wouldn't be bullish for us for them to push us in there, but short term, it could be. It's possible they want to do that. It's possible. Maybe it helps them settle their obligations to those ETFs by getting GameStop back in them. We talked about this a lot. I don't think that's the case. I think they just tried to push the price down as hard as they feasibly could to dodge this additional window of gamma exposure. That seems to be the most likely scenario. If GME got bumped, I'm not even sure that GME getting bumped down into those ETFs is better for them. It could be, it may not be. If it did, it could pull those obligations back out of the warehouse and put them in a lot of jeopardy. So yeah, that's hard to say. or it could create more obligations in the Russell 1000 than they're prepared to handle. We'd have to see. If it did, that's something I'd be looking more into. But right now, I'm not super concerned because I think we're going to go back up, and we're not in a rebalancing period. And we may already be moving to the S&P 400. I'm not sure, but I think they're. I think that might have been early or late December when they checked that. Theoretically, there should be an arbitrage opportunity with IV and entropy via any divergence / delta discrepancies that they may have. If so, how might that look from a calculation standpoint? I'm not going to go into entropy swaps, Stefan. If it's something you want to look into, you can look into it, but I'm not discussing those until much more data is confirmed at this point. So you're barking up the wrong tree. Can you explain how to play 0 DTs on SLD Friday cycles? How to time it? 0 DTEs on the SLD Friday cycles and how to time it. I didn't play 0 DTEs on the SLD Friday cycle. The 0 DTEs I played on GameStop last week were due to me thinking that the gap was going to fill and willing to risk some money on that projection. We had long side support at 80, 90, and 100. And we had short interest at 110. A dip below this very, very likely meant that the longs would push back towards the short side, as this would find an equilibrium, right? Because there was a wide spread. And so I played this spread. It worked out. It doesn't always. Starbucks. Oh, okay. That I could do. What about it? Where are you in it, Batbones? I still have like 105s, I think, and 100s for like June. It's not looking great, but I think a turnaround is more than possible. I don't think they're going out of business, and the unionization efforts are starting to calm down a bit. Or they'll just unionize, which shouldn't prevent further growth in the company. It's like, I don't think it's going to hurt them that badly long term. I think they're pretty undervalued right now. Is there some more potential downside? Maybe, but it's unlikely. They're like 113 billion. I think we're hitting a pretty good support level. If it starts to slip below 95, I may close out of my position. But right now I'm pretty confident in a turnaround. And I don't need it to turn around a lot, right? Like it's just a $10 turnaround and I've got 6 months. The short-term play on Starbucks was a wasted effort, but that was mostly due to the rate hike, I think, and the SLD. If it was just SLD or just the correction and the SPY. I mean, whatever orders they internalized at like 150, dumping that flow at 100 is profitable because of the arbitrage. But, also that can go both ways. Whatever order flow they internalized at 100, dumping it onto the lit exchange higher is going to cost them money. That's why internalization ramps up their tail risk so much. Does anyone approach you spin a narrative one way or another for enumeration? No. Not to date. I've had people ask me to be in documentaries, and I've had a bunch of like cryptocurrency services reach out to me. I don't really think my stream's like big enough for anybody to take notice. I mean, I think if there were like bad bad actors pushing for that, they would target streamers with a bigger audience. I think somebody reached out to me to push some ETF products, but it was like unrelated to GameStop. And I don't really take any sponsorship things, or I haven't yet. I'm more concerned about the transparency, and so that's why I haven't like Skillshare and stuff like that have reached out to me, but nobody really in finance, which is interesting. I've had a few platforms that wanted to like host my stream, and I've also turned those down. Um, that's it. Is there a possibility that OMM stops extending the options chain to the upward to suppress price movement if the stock does rip? Yes. But that fucks anybody with variance positions, right? If they're short or even long variance, they need that wide call chain to hedge, and that could blow up their position without being able to hedge to the upside. Can you tell us something juicy about GameStop that's been unjustifiably has been flying under the radar, i.e., the dark horse of juiciness? No, I think you guys pretty much know what I know if you understand it. Thoughts on? I'm not like holding anything back. I mean, I don't want to discuss the entropy swaps yet because we're not sure. They could be, but we need more data, and I need to dig into it a lot more. And I haven't really had a lot of time to do so lately. It looks compelling, but still not. I don't have enough confidence in moving forward with disclosing any of it yet. Thoughts on Jimmy holding steady during a crash? You mentioned institutional longs want to be a catalyst, but would them blowing through that sell wall keep price green, put pressure on margin? I mean, if Jimmy's doing very well or underperform or overperforming the market during a crash, that's going to cause a flood of buying into GameStop. I don't know if it'll be sufficient, but it will cause funds to shift money into GameStop in order to protect their assets. That's true with any stock that's showing resistance to a drop in the overall market or inversing the overall market. Were SLD rules supposed to change this year? Um, I think they did in some regard, but I'm not sure what. Is it possible the last week wasn't SLD, was instead prepping for the max 60-day deferment from Thanksgiving running out? That's also possible. They want the price as low as possible because they've been called. There would be time for them to obviously work through that. And there are some indications that were smaller funds or smaller positions being called over the last week. But it's hard to tell, right? Because it's going on underneath all of this like market insecurity and shift in sentiment. And so it's hard to tell what's just selling versus what's a call or what's a large position being dumped. That's why Netflix drew my interest, was because it looked like a position being dumped in the way that one would dump it for a margin call, right? You don't suffer that kind of loss from slippage unless you need the money immediately, right? Like you immediately need liquidity. For us to test 150, are we stuck just waiting for longs or FOMO to get people to pile in and improve the price? Do we require a lot of people buying in to make it happen? I think the push through 150 is important. We may not need anything. If the current like short positions are prepared for a run, they're not going to do a lot to stop the price. Um, the call chain looks compelling to the upside. It could be that the delta hedging is enough to push us through and over. It may not be, but longs will know that. And if they want to push the price, they can. Especially if they're long GameStop, like it's a good opportunity for them to, like I said, it's, you know, longs don't like to pump from the bottom, but if the price stalls out, that's when they like to buy in order to keep the momentum going. Is there enough people playing options to trigger MOAS? The Cole keeps saying that DRS is the way. Options are bad, so we can't count on them. Unfortunately, true. I think that the current open interest is pretty substantial. I don't know if it'll be enough. It's too many things are different. Like we had way more open interest last year, but it was closer dated. You know, it was mostly cash settled. Like there was no expectations, right? Like people just took profits. This year's like a totally different situation. So while our open interest may not be as high as last year, it may be sufficient because of all the other effects on GameStop, like the buy and hold and the illiquidity. It's you know, it's not an easy to borrow stock. But to just blatantly say it's sufficient, I think would be a reach. If it, you know, if it was equal to last year plus all these other conditions, I would just be like, yeah, it's more than enough. But it's not, and a lot of those other conditions are kind of too variable to predict. I was hoping that we would have more, I guess, but we have more than I expected us to get. So like our current OI exceeds my expectations, but it's also still under what we had last year. So I don't know. I don't know how to weigh that. Even my uncertainty of coming events is like it's backed by data. Entropy's at its lowest all year. We don't know what the stock's going to do. It really is a kind of a conflux of everything. It's all going into what happens here will determine a lot of what happens moving forward. Yeah, I don't agree DRS is useless. I don't think we have any good evidence of it doing anything. And I think the things that people think it will do are unsubstantiated. Farmer Joe, thank you so much for coming to Dillionaire, man. Hit me up on the Discord. I'll get you added when the stream's over later today at some point.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got roles. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD, cause when this shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon win. Praise be to RC and the VWAP, please, cause I need G and me to moon soon, man. Got the van GG on the CNBC saying that he ain't seeing no collusion. And we might be apes, but we ain't that Joe. Motherfucker trades this popcorn code. When the Citadel fails, I'm a bomber on boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult.
Yeah, I did know that there was a crypto called Pickle Finance at one point. I think it's like dead. I don't think it, maybe you can trade it somewhere still, but I think it was just like some weird altcoin from way back when. There's a lot of them. Unrelated. I've never owned any. I don't know anything about it. Any cooking shows contact you? No, but I did want to reach out to Binging with Babish at one point, and I totally forgot to do that. Thoughts on GME current value, looking at the cash on hand, property value, etc. I don't understand how 2 months ago it was valued at 2.5x higher than now when nothing has changed. It wasn't valued at 2. It was just trading at 2.5x. That doesn't mean it met that valuation standard. There's just... yeah. Things are not. The like efficient market hypothesis is kind of bullshit. I mean, it's nice to think about, but it doesn't really work out that way, you know? I think some stocks adhere more to that than others, but GameStop's definitely not one of them. Could Sony dumping also have been someone needing funds? It's possible. I do see a reason for Sony to dump in response to the Activision Microsoft merger or buyout. That's just, you know, an issue with consolidation of I mean, obviously if it doesn't play out or it gets stopped in some way, then Sony would rock it back up, but it definitely hurts their business. Why were you expecting the OI to be so low? Because of the anti-options sentiment, which has, I mean, I think the anti-options sentiment has not been as bad as I thought it would be. Like I totally expected to release my DD on options and just get burned at the stake like the witch I supposedly am. And then, you know, that video came out a few weeks later, and I was getting roasted alive for a little while. And then that video came out that kind of confirmed it, and then people started to tie that back to Petterfee and see what I was talking about. And then, you know, the sentiment picked up a lot. It started to pick up on Wall Street bets. But really, I mean, like, all I could ultimately do is release information, and then what people did with it was up to them. And no offense, but I didn't have a lot of confidence in the majority of people listening to what I had to say. And I still think a lot have read and not understood it at all. They think they do, but then they make statements that indicate they have no fucking clue what I was talking about whatsoever. Because my thesis is a very much if this then kind of statement. And, you know, when you don't have the initial catalyst, then the realization isn't going to happen. And the problem is determining, do we have enough of that or not? And obviously, like any theory, it has to be tested. And so the ultimate conclusion would be either yes, we did have enough and it triggered a squeeze, or no, we didn't and it did not. I'd rather use Shillis Street shows. I bet the OI will pick up if the price starts going up. Probably. I was hoping that would be about half of what we had in the run last year. Like, I think last year we had like 400,000 open contracts going into the initial price bump. I think right now we have like, it's a little over 150,000 last time I checked. And really, we don't have a lot of stability in the options chain after 200. Like 250 and 220 are interesting, but something else is going to have to come in and continue to drive the price to see 300. If we break 350 or 340, then the price could just rocket up. But current open interest is good. I mean, it doesn't look terrible. It's kind of spread out. Most of it's at 200. But what happened was this built up a lot. Oh, you can't see that because it's the wrong color. And that's relevant because they dropped the price so fucking low that people were able to buy into calls they normally wouldn't have. So that's bullish. That's not a question. That is bullish. Thanks for Parm recommendation on Friday. Cool spot, great food. Cheers. Awesome, Glider. Glad you enjoyed it, man. I just want you to know that I've been trying to reach you about your car insurance. Thanks. Do you think people taking a tax hit on their IRA will have more of an effect than DRS? What? I don't know what you're talking about, Nautical. Does Netflix dumping about the same time Bitcoin has been dumping? You're just reading into correlations that may not have anything to do with each other. BTC's down because the fucking ETF was priced in and it wasn't approved. Mostly. Also, market instability and people pulling cash off the table. Fund your wife's husband or husband's IRA based on your earnings if they don't work too, then turn around and fund them for 2022. Shorty's very afraid of this, especially when you then invest in stocks. Huh. Do you have any other GME DDs in the works? Sort of. But I still have to wait. People are very impatient right now. PBIG's dead. Garbage. Piece of shit. I don't care what happens to it. I managed to escape with like basically 0% gains. And it had all the right signals. It just didn't happen. I think they may have a little too much control there, and they can let it run just to the levels they need and then push it back down. $150s, $170s on a serious discount. Also, didn't the 6 million of puts expire mostly worthless on Friday? So a lot of pressure should be released, plus FTDs starting to come and all. Hopefully they compound and the price rockets. Yeah, that's what we're hoping. Is we're hoping that all of these cycles converge and we see a massive amount of price improvement. See you later, Pam the trader. Would someone else short on these stocks lurking in here please tell us how they feel about folks funding their IRAs and then investing in GME? Why would it matter? What's the difference between just people buying GME or people doing it that way? Because is this because of like the DRS thing? FYI, the time, just in case. What time is it? Oh shit. Yeah, I do have other stuff to do, but it's fine. I'll take a few more minutes. There'd be no way to see that coming. Feb 18th, by the way. See what coming? Smells like up, dog. Expand on your partial sentence. Trash. Does the market correction give the shorts more firepower? It can increase their margin, yeah. If they're mainly short, then it means they have more wiggle room with their margin. Yep. I think that I don't even just think that they're mainly short. I think they're massively short. Um, but that also could mean that they just need that margin to recover from any potential price action that occurs on in this sector that they've shorted the shit out of. Usually do, but keep us up to speed on put flow and shares borrowed this week if there's any runs. I haven't gotten the hang of shift search yet. Yeah, absolutely, Cat Talk. I do. I will. Where do you go to look at shares borrowed? Uh, IBKR and Fidelity. And I just use that as like a gauge of interest in the lending pool more than anything else, because it is not transparent. But I do watch those two, and I watch for interest rate increases on mostly IBKR. They're a little more sensitive to them than Fidelity is. Bumps in borrow rate on Fidelity are interesting though, and generally significant. Thanks for answering my questions. Yeah, absolutely, man. Cheers. Thanks for being here, Dominic Joseph. Where do you go to look at your spot? Answer the thoughts on Alta, the stock Domo keeps pushing on Twitter. Isn't he just like a big shill? I don't know what's going on with this. It's like some shitty penny stock. It hit $11 and then trended down for the last 3 months. Is there a reason he's pushing it? Is there some like bull case here? I still think anybody running a fucking hedge fund off of Twitter is doing their job wrong. Are you rolling your DDS? I don't know. I don't have that much money in it. I'll probably just wait to see what happens. What have I've got almost 20 calls? No, 20 calls? 21 calls? They're all super far out of the fucking money. I don't know. I'll probably roll them. Some. Maybe. I feel like DDS would spike first. It may not be worth it for me to roll them. All of my calls on DDS are for Feb 18. I've tried buying further out. I just haven't gotten fills at prices I'm willing to pay. Have you talked about your plans with crypto? Not do you have anything you're looking at? I don't really have plans with crypto. I don't like cryptocurrency very much. I own some, but I'm not like bullish on crypto. I have HNT. I think that one's pretty good. At least it's backed by something real and does something. I have some LRC. I have Ethereum, but it's like they're not like primary investments of mine. I might buy some Bitcoin on the dip just to sell it if it goes back up. I know BlackRock filed to open a blockchain ETF, so that could push the prices back up again. But like I'd wait for stability on the current downturn before I bought into anything. I might pick up more Solana. That's probably about it. If I can get some more XRP, I might buy into that. I think they're shit with the SEC is like starting to turn a corner. If Webull goes down, what's the next most convenient real-time charting in your opinion? You can go with like TDA, or I mean, if you have Fidelity, you can use that. They have Active Trader Pro. You can just, I think you can just open a TDA account. You need to like fund it, and you can use charting. You might need to fund it, but minimally. Um, you can pay for trading view, like real-time data. Any info on your educational channel? I'm working on it. It's taking a lot longer than I thought because there's like some things I need to learn how to do. And then also like it's not set up and stuff yet. So, but I'll let everyone know and I'll do like an announcement and stuff and when it goes live. Right now I'm like recording stuff and trying to edit, and it's gonna take a little time because I'm doing this also. During a squeeze your stop limit order, how do you calculate the distance between your stop and your limit? I give yourself some space depending on volatility. You don't need to set your limit so far out that like beyond a halt, but you probably need to set it out far enough that you'll guarantee a fill. So probably like within 2%, maybe 3% of your stop if it's really volatile. You can actually technically use the range on that first volatility spike after the drop, right? So after you come up and then you get that first candle that's more volatile, you can usually use the range on this candle. Like if you want to get really technical, you could use the range on that candle to set your limit. Did you fix the anti-ape sentiment of WeBull's CEO? How can you stay with him if you were for GameStop and the short squeeze? I mean, was his sentiment like anti-ape, or was he just saying that like people sell their stock? I think Webull's probably a platform mostly used by day traders and would see a larger amount of like GameStop order flow on the sell side from retail than other platforms would. Whereas like people in Fidelity are probably mostly buy and hold, Vanguard, places like that. Whereas Webull, you probably see a lot more active traders on GameStop. I mean, that seemed to be what he inferred from the statements I read, was that, people are buying and selling, which I don't think is entirely untrue. People do. I've said that for a long time. Not everyone buys and holds. Also, he's like a software developer. I really don't care about his opinion. I saw you DM on Discord about PowerPoints. Oh, thank you. I think might send me something again because I probably lost it. Looking like Feds are going to raise rates this week, right? Possibly. Thinking of selling some of my market ETFs and picking them back up after the correction. It's probably a good idea. Going to a nice steak place in Texas tonight to pre-celebrate experiencing the thesis in real time next week. Cheers. Also quit my job, have a few weeks off to really enjoy it. Thanks. Awesome, Snake Whips. I'll see you around, dude. IBQ or light or pro. You decide to go back to school or not? I start classes in like 5 days. No, next Monday. 6 days. The 31st. I think I have orientations or something on the 28th, but I'm not gonna go to that. There's something else this week too that I'm not gonna do. I'm just gonna see if I can pass the classes with like minimal effort or attendance. I don't think they give a shit as long as I'm paying. Yeah, no problem. Still make it. All right, guys. I think that's enough for today. If there's any last minute questions, give you guys a second. All right. So that's about it. Um, I think I'm pretty bullish on this week. I think we definitely have some interesting things going on. I think we're going to see some price improvement. I think the call chain favors us for a change. And I think we have some positive pressure to put some of that chain in the money, which can accelerate more growth. So bullish, but tempered, right? We've all been burned a lot by GameStop. So we know not to approach it with the wild glee of a kindergartner. Thank you guys, and I will see you tomorrow morning at 9 a.m. Have a great night. Bye-bye.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
We're not a cult, yo. Just some pickle themed fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Creon, sit. Good dog. Not an advisor. Frigulon.